Hi everyone, my name is Fischer, also known as the New York City Broker. Today I'm going to share some tips with you discussing what is a cap rate. And remember to contact me if you're looking to buy, sell, rent, or invest in residential or commercial real estate in New York City. Cap rate or capitalization rate is a simple ratio that allows real estate investors to understand what percentage of the capital they have invested that they will get back as profit each year. Cap rate can also tell a real estate investor how much profit they are making compared to how much they've invested in a real estate asset. The cap rate can be calculated for almost all types of real estate investments, including commercial properties like retail stores, office space, multifamily properties, and residential properties like apartments and brownstones. Since the cap rate is calculated for income-producing properties, rental income, it doesn't account for the profit you may get by selling the property for a higher price than you bought it for. So even if it's an important metric for calculating a property's income-based return potential, it doesn't help you understand what the total capital appreciation potential of the property will be. So how is cap rate calculated? The formula for cap rate is cap rate equals net operating income divided by the current market value of the property. It's represented as a percentage. So net operating income, or NOI, is the money or rental income you as the property owner have left after taking care of all the operational expenses associated with the property. That includes maintenance expenses, utility bills, taxes, insurance, property management fees, HOA fees for brownstones, etc. Debt is not included in the cap rate, so if you are investing in a property through financing, you will have to factor that in separately. Current market value is the price you are paying for the property. For example, if you are paying $4 million for a multifamily property that offers a net operating income of $500,000, your cap rate would be, cap rate is $500,000 divided by $4 million, which is 0.125 or 12.5%. So the property is paying you back about 12.5% of the capital you invested in a year. Factors affecting cap rate. The cap rate is directly proportional to the NOI. The higher the NOI, the higher the cap rate will be, assuming the property price remains the same. You can do that by increasing the rent to an extent, since about half the properties in New York City are rent stabilized, decreasing the property expenses so you can manage the property yourself, which cuts the management cost, or find a more competitive insurance price. Cap rate is inversely proportional to property prices. So if property prices go down, your cap rate may increase, but it rarely happens and it reduces the overall worth of your asset. The vacancy rate is another factor that can affect the cap rate. In a property with multiple units, high vacancy will lead to less overall rental income. High turnover rates and the additional cost to fill vacant units can also decrease the cap rate of your property. Cap rates in New York City. New York City has one of the lowest cap rates in the country, and they usually remain around 2 to 3%. And in all the New York City boroughs, Manhattan usually has the lowest overall cap rate, followed by Brooklyn. Manhattan's cap rates are among the lowest in the country, and one reason is because of the extremely high property values. Manhattan has the most expensive neighborhoods in the city, and even though the rent is also higher, a positive part of the NOI, the high purchase prices keep the cap rates down. Thanks so much for joining me in this discussion regarding what is a cap rate. If you have additional questions, please feel free to reach me at brett@thenewyorkcitybroker.com. Also, don't forget to like, share, and subscribe so that you, your friends, and your family members can get all the best real estate content. I'm Fischer, the New York City Broker. Have a great day.